In terms of the fiscal deficit, we're expecting spending to really increase over the remainder of this year and in 2020 ahead of the election, as well as lack of oversight now that the IMF program has ended. The MPP's Ghana Beyond Aid strategy is really hindered on increasing industrialization and trying to increase growth in the private sector, particularly in projects like the One District, One Factory and other similar programs. This requires a lot of spending. It's had fairly mixed success in terms of job creation, and in terms of national coverage is really quite mixed. Some areas have done very well. Other areas in the rural north have really done quite badly in terms of industrialization. So the government is trying to ramp up this and other programs ahead of the election. This will really drive spending, as well as significant subsidy programs and large public sector wage bill.
All right, then when you say it's trying to drive spending, I'd like to get what your outlook is for inflation.
This year we're forecasting inflation to dip slightly from last year, 9.6% average over the year. Largely driven by weakening CD. Food imports are really driving big increases in food prices.
Now, on the currency, we know the currency has had a few challenges over in the recent past, but I'd like to know what your call is and what you think would drive and shape the currency movement.
The CD really depreciated quite heavily in the first quarter of the year. This was mostly just due to low supply of foreign exchange. In the opening months of the year, this was driven by weak demand for government bonds, particularly from foreign investors. That declined quite sharply, as well as companies holding on to their FX reserves because they're repatriating profits in the first quarter of the year. This has gained a bit of ground. It's not at the 5.44 mark that it was at earlier in the year. We're forecasting 5.31 against the dollar average over the year. The Bank of Ghana has injected a bit of money into the system to try and shore it up, and $750 million bridging loan, as well as some money from coming through from cocoa bods. And there's the $3 billion Eurobond coming on the market in the next few months.
So I see, yeah, so you say from your note, you say that the cedi will remain prone to periods of volatility.
That's right. I mean, there's really a lot of structural factors keeping the cedi relatively weak, twin fiscal and current account deficits. Exports are really predominantly driven by hydrocarbons and other commodities, and the price outlook for this is quite poor over the year, particularly gold and oil. Even though production will increase a bit in both of those, as well as cocoa is really not looking good because of poor quality of tree stock. So that would depress government revenues, and then the current, and that's driving the current account deficit, as well as the large fiscal deficits.
All right.
2020.
All right. Well, the country is not without its challenges, but I'd like you to speak to the policy response, especially from fiscal policy standpoint.
The government is very heavily involved in the economy, and some of the One District, One Factory projects have not been doing very well, and they required some substantial government bailouts. This should continue to drive employment generation in the country, but it's not necessarily the best use of resources because a lot of these companies aren't operating particularly efficiently. The government has sought to shore up the banking sector. The Bank of Ghana increased capital requirements for banks at the end of 2018, tripling the previous minimum capital requirements. A number of banks did close on the back of this, and others were forced to merge. A lot of banks took very substantial cash injections from the government. In 2018, credit to the private sector across most sectors of the economy really declined very heavily. We have seen big increases over the course of 2019, and expecting this to continue as the banks that remain in the sector are a lot stronger and have far stronger capital reserves to maintain credit levels.
All right, but I'm also curious to know about your outlook for monetary policy.
The Bank of Ghana cut interest rates in January, 16%. They did signal that they could see further rate cuts if inflation declined. It has come down from 2018 and 2017 levels, but as I said, we're expecting it to remain fairly elevated. So I don't see much room for a rate cut.
All right, then still moving on from the fiscal and monetary policy, though, I'd like you to get an outlook from on the political front, because we're seeing that the country is gearing up for elections next year.
That's right. I'm expecting the ruling NPP to remain in power, presiding over a generally improving economic situation. Private consumption levels have increased as well over the NPP's tenure. The NDC, who were in power previously, they re-elected John Mahama to lead them, which is a bit of a surprise. I think a lot of Ghanaians still blame him for the fairly weak economic situation over his tenure, and I don't really think they can present themselves as a credible alternative to the NPP's Ghana Beyond Aid strategy.
All right, but let's look at how the government has been trying to, improve its revenue generation. How would you rate how the government has gone about it so far?
It hasn't. I mean, tax intake has increased. I think over the last 13 years, 11 of them have seen revenues well below expected levels. A lot of tax loopholes exist, and there's a large degree of tax avoidance. I saw of the total Ghanaian workforce, only around 1.2 million people are registered to pay taxes. Move payments to electronic means will help this and automate a lot of payments and remove the opportunity for graft. But I still think a lot of payments, particularly for the informal sector across outside of big cities in the rural areas, will still remain under the radar. So I think tax collection will be relatively weak. We do see a number of government drives every year to try and improve the tax take, but not particularly effective.